Kenyan was also up by about 2.1%. That's the country's electricity supplier, perhaps riding on a new wave with a deal they signed with an investor yesterday to up their gas infrastructure. Going to the shilling, it's expected to stay within the 74 shilling, 75 shilling range against the greenback due to a slowdown activity ahead of the Christmas holidays. And to join us now in studio to take us through what went down in the Nairobi Stock Exchange today is Henry Chege, a dealer with Afrika Investment Bank. Henry, thank you so much for joining us today.
You're welcome.
Now, talking of Christmas, analysts are saying the boss is certainly not playing Santa as we get into that particular season.
Yes.
Who is weighing the boss down?
Well, basically, up until last week, we had seen Safaricom had really pushed up the index, looking at the indicators, that is the NSE 20 share and the NASI. But this week, we've seen considerable people taking their profits in terms of that particular counter, and the volumes that have been moving in that particular counter are really the ones that are really undermining the progress as it were of the index. So that particular counter, looking at again the number of shares listed in the BOS, is actually what is weighing down the index.
Looking at the banking sector now, all the banks seem to have already sent in their Q3 results. We're seeing reports asking investors with the corp bank shares to move from a buying position to a holding position, while those with the equity bank shares are actually being asked to move from holding positions to selling positions. Why is this, and what are you advising investors to do? Well,
from a fundamental perspective, with regards to equity, we are finding that up until late last year, they were at a compounded annual growth rate of around 100%. Basically, with the economy, I mean, the way the economy was performing at the time, we saw that the loan book was growing quite big. Thus, the interest income, the funded income was growing in tandem. But in light of the global crisis and the current growth that has been quite negative, we are seeing that that growth has actually dropped up to around 32%. Now, if that revenue stream is actually curtailed back due to economic times, and going forward, we're actually quite skeptical about how the things will turn up for the fourth quarter and probably part of first quarter next year. Therefore, our view is that due to these pressures that are coming in, particularly from a funded position, we are likely to see these banks reporting more and more subdued growth. That's why we are giving such advice to clients to actually offload their positions in these counters. Yeah. Another
sector that seems to be generating quite a lot of interest is the agricultural counters. I was speaking to one of our regular analysts earlier today, that's Ali Khan Sachu, and he's been getting calls from investors in Asia and other foreign investors very keen on this particular counters. And I'm wondering, is this because of the record prices we've seen of soft commodities in the global markets, or is there something else we should be looking out for?
Well, by and large, the soft commodity prices is a factor to consider, to weigh in deeply. And going by the returns we are seeing in the tea sector particularly, where we have seen farmers really capitalize on the price of the commodities. But yet again, looking through, I mean, part of third quarter to for the quarter we are in now, the fourth quarter, we are seeing the weather conditions are improving. I mean, looking that being tied in closely to inflationary figures that you're getting back. So it shows that the feedback you're getting is the food prices are actually coming down. And with that in mind, it's just a matter of time when activity, be it in the agriculture sector, now starts picking up. Because, I mean, looking at statistics, again, from the Kenyan National Bureau of Statistics, that sector accounts for 25% of the GDP. So going by those statistics, the foreign investors are actually taking positions quite early ahead of the pack so that they can actually benefit from a possible price rally, be it first quarter of next year, second quarter. But again, this is again pegged on one, the first on soft commodity prices, and two, the weather conditions.
Talking about activity, tomorrow we get to see the uptake of the second tier of the infrastructure bond.
Yes.
Inflation rates today were announced lower at 5.5%.
Exactly.
What are your expectations of what we're likely to see tomorrow?
Well, going by the short-term papers the government has been issuing and the current liquidity levels in the market, whereby we are seeing the interbank rate has gone down post Kenyan, the Kenyan in PIBO time, where interbank rate was at a high of 3.25. So improved liquidity in the market and an actual improvement in terms of the interest rates, we're likely to see that that there's going to be probably a full subscription in terms of the uptake of the bond, and two, with people having had the first analysis of the first infrastructure bond, where we saw where actual money, where it went to actual sectors in the economy, people tend to associate with that. And the moment they see that the money is going somewhere, then they are obliged to come more into the bonds market. A case in point is we've seen a considerable uptake by retail investors, a case that is becoming more and more prevalent in the bonds market. So these factors are what are going to actually make us see some quite considerable uptake in the bonds market, particularly with these second infrastructure bonds.
Thank you very much. We'll have to end it there. We've been chatting with Henry Chege, a dealer with Afrika Investment Bank, giving us a heads up of the latest news shaping the Nairobi Stock Exchange. That's it from us.